day trading, swing trading, and investing. If you want to know the difference between the three and the right mindset and actions you should be taking per category, then keep watching. I'm going to break down each one: day trading, swing trading, and investing, the actions you should be taking, the time frame you should be considering, and what happens when you start mixing the three and getting mixed results. Let's get into it. If you joined us on YouTube live last week or on LinkedIn live or Facebook, we broadcasted to all three. I kind of walked you through some trades that I did where I took some losses, but ultimately jumped back into the game, jumped back into trade and made the money back. And it was a pretty wild ride. And, you know, one of the questions I got asked a few times was like, how do you decide to get back in the market after you take a loss or what may appear to be such a big loss? And I had to really think about that. And I sat with that for a minute and I thought one big piece of it is understanding the game that you're playing. The score that we keep is for money. If we're right, we quote unquote win, we make more money. If we're wrong, we quote unquote lose and we lose money. And so just understanding the game that we're playing really helps to level set that there's going to be wins and losses. It's kind of like asking a boxer, you broke your nose last fight. How do you get back into the ring? It's like, we're boxing. People are swinging at my face. It's a good chance I'll break a nose. I could, lose a tooth or whatever the case may be. And so when you understand the platform and the game that you chose to play or the industry that you chose to make money in, it's like asking someone who got fired, how do you get up and go get another job after you've gotten fired? And it's like, or you got laid off. Maybe it wasn't your fault. And it's like, well, that's part of working. It's a chance I could get fired or laid off, just like it's a chance I can get a promotion or hit a bonus. So it's the same thing with the stock market. And so it really comes down to, again, understanding the industry and the game that you're playing in and then having that right mindset. And then also, the other component of that is knowing the game plan and following the game plan. And that's where I think a couple people get confused about what they're doing. So let's talk about day trading. Let's start there first. When you think about day trading in the game that you're playing there, you're literally looking at a chart or some stock movement for the day. And so you're waking up, you're analyzing, what is the momentum like today? Or should I say, what is the sentiment? Is the market sentiment bullish or bearish? Well, how do you find out if the market sentiment is bullish or bearish? You might check the futures. You might see if any news came out overnight or any news that is supposed to come out during that day, and what is anybody anxious about? Or what is the world looking for? What is Wall Street looking for before that news come out? And if that news comes out, how is it being interpreted? Is it interpreted bullish, bearish? So those are some things you might use to judge the sentiment for the day. Are we bullish or are we bearish? But the key is you're waking up every single day saying, are we bullish or bearish? So we see an opportunity that stocks are going to go up or an opportunity for stocks to go down. All right. And then the time frame is daily, and the game plan is to take advantage of that daily momentum and make some money today. And that's where I think a lot of people get confused with the target of the industry and the game that they're playing. If you're day trading, I don't care if you're up $50, $100, $200. When you're up for the day, you're up, and that was your goal. Your goal is not what most people do, which is how high can it go or how far can it fall. Your goal for the day is, let me see. I don't even think your goal should be money. Let me even back up from there. I don't even think your goal should be money when you're day trading. Your goal is to ride the daily momentum until it changes. And that's however much money you can make while that momentum is happening is how much you make. It might be $1. It might be $100. It might be $1,000. It might be 100,000. You might just break even for the day. The point is, you're riding that momentum for the day or for the minutes or the hours until it changes. And the moment that momentum changes, you are technically done for the day, unless you try to play it back to the other side. But most people can't switch and be playing a market to the downside and then turn around, switch and play it to the upside. But the key is you're taking advantage of daily momentum as long as that momentum is in play. And once that momentum changes or turns, get out. It's not even about how much money you made or even about how much money you lost. It's about that pattern for the day is over and you were either right or wrong about playing it in that direction. And you made however much you were able to make based on how much you were able to buy. And sometimes that could be 1%, 50%, 75%, 100%, but you don't necessarily control the percentage, just like you really don't control the momentum. But what you do control is your ability to recognize when that momentum is slowing down or whether that momentum has peaked for the day and may be done, and it's time for you to wrap up your day trading extravaganza. Now, let's talk about swing trading, because this one sometimes gets confused or lumped in with a day trader. When you're swing trading, the time frame is short to medium term. Short to medium term could be 1 week to maybe 3 months, right? Typically no more than 3 months, because you want to be out of a swing trade before earnings comes out, because we all know that good earnings or bad earnings could totally rock or affect the stock. And so that's why it's typically about 3 months max on a swing trade. Now, similar to day trading, you're looking to identify a pattern, but it's not necessarily a daily pattern. And so when you're swing trading, you may say, the market is looking like we're getting near a top or near a bottom. That doesn't mean you're calling a bottom today. It doesn't mean like, I got to be right about calling this bottom right here, right now, today. It's more about, hey, I'm noticing that people aren't selling as much. It's not falling as much every day. Maybe it failed and was bought back up. And so you can see the momentum starting to change over a little bit longer period of time, over a couple of days, over maybe a week, maybe even over a month. You kind of notice that the momentum is changing. So different from day trading, you're trying to chase the daily momentum, but swing trading, you're trying to catch the next swing to the upside or swing to the downside if you're trading using put options or you're shorting the market. And so your time frame here, it's a little bit different. You have about a week to 3 months to see if you are right. But the mindset piece of it is you don't have to be right on day one. It means day one, your account could go negative maybe because you are testing the market. You believe it's hit a bottom or a top, and you might start to test and put some capital to work. But it doesn't mean, and here's where most people get like salty about their investing and have the wrong mindset. A lot of people think, I bought it today, it better start going up. And it's kind of cocky. It's kind of pompous. It means that you, sir or ma'am, or, you specifically know the exact day, the exact minute that a stock is done going down. And the exact day and minute that a stock is done going up. And as soon as you buy, it better start turning around and going higher. Or as soon as you sell, that's the last day that the stock can continue to go up. So it's kind of a cocky way to think about trading or investing, which we'll get to in a second. But swing trading is saying, let me give myself enough time to see if what I believe is happening on the chart is going to play out. And I don't have to be right about that during the first day. Unlike day trading, you need to not only be right about it that day, you need to be right about it for a specific time period. Maybe it's bearish for 2 hours and you play put options and you get out. But with swing trading, you understand the game that you're playing is, number one, you're in the stock market trading, not investing, which we'll go to in a minute. But you also understand that no matter if you're day trading, swing trading, or investing, the stock goes up and down all day long. And so when you're swing trading, you're like, I don't necessarily care if it's up or down throughout the day. I care about where is it at over the next week to 3 months. And so when you understand, the game that you're playing is, it could be up or down, you're not as frazzled that you're down a little bit. You're like, what do you do when you buy and you're down immediately? It's like, depends. What game are you playing? If you're playing day trading, close the trade. It went against you. you predicted the momentum direction wrong for the day, for the hour, whatever the case may be. And what do you do if you're swing trading? As soon as you buy, it goes against you. It's like, well, let's see where it's at in a week, 2 weeks. We still want to have a I'm wrong level, a stop loss, a level where we just don't want to lose all our money because we're just waiting to see. So you do have to have a technical level where you're like, the pattern that I thought I saw is not even a pattern anymore. Let me close this out and get out. But you also want to have, as long as that pattern is still in play, you want to have patience to say, well, I don't have to be right about it moment to moment. And I don't even have to be right about it day to day, meaning it could be a week where it hangs out at the bottom before it starts going up. It could be a month where it hangs out at the bottom before it starts going up. What's important is you've identified an area where you believe it's going to swing and go the other way. And so being up or down throughout the day is just part of it. And so it helps you control your emotions if you know this is just part of it. I didn't get in this to be right or wrong at the end of the day. I got in this to be right or wrong for a week, up to 3 months. And I'm going to trade this shorter term pattern and see if I can catch the swing up or the swing down. Give myself enough time to be right, up to 3 months, but also recognize when the pattern is totally leaving the original pattern that I thought was going to happen, and give yourself an opportunity to live the trade another day by taking a small loss if for some reason the trade goes against you. Now, when you think about investing, the word typically implies long-term, right? Meaning you're going to sacrifice something today, some money, build a business, buy some equipment, hire an employee. I'm investing. But here we're talking about the stock market. You're investing, meaning you believe this company is going somewhere in the next 1 to 5 years. So it doesn't necessarily matter. Unlike day trade, you don't care what it does during the trading day for one day. You're not in and out of an investment in one day. That wouldn't really make sense. All right. You're also not swing trading if you're investing, because you're like, I don't necessarily care if it's about to swing back up or swing down. Stocks swing up and down months, weeks, years at a time. You're thinking long term, 1 to 5 years. Everyone's going to continue shopping on Amazon. You're thinking 1 to 5 years. Cars are going to continue to switch over to electric. So I'm going to stick with Tesla, regardless if short term they raise their car prices and there's inflation and the stock sold off. You are not investing, whether you're buying the stock or the option, for what the company is doing. Definitely not on a 3-minute candlestick chart for intraday for like day traders. You're definitely not buying it per se because you think it's going to swing up in the next 3 months. And if it doesn't swing up, it's not worth owning. You're buying it because you're investing and you're saying, hey, this is a good place to park my cash. And I believe it will continue to appreciate over the long term being 1 to 5 years. And so here's where the mistakes come in. Here's where a couple of mistakes come in when you look at all 3 levels. Some of the mistakes that people make day trading is they turn it into a swing trade or an investment. And the reason that that's a big mistake is because you got into the trade to get in and get out in the same day. The moment you turn it now into a swing trade or you turn it into an investment, the cross, I don't know, the word that comes to my mind is cross-contamination. When I say cross-contamination, I'm not talking about food, but the cross-contamination with your thinking and your action is you applied a trade that you were going to get in and out in one day and while the momentum was still going. But when you turn it into a swing trade or investment, the cross-contamination is over in those areas. You have 3 months. And then when you're investing, you have a year. And so now anything can happen during the day and turn the stock back around. And so you don't have the advantage of an investor of waiting 1 to 5 years now. You don't even have the advantage of a swing trader and waiting 1 week to 3 months. And so because of that, you can't get off your game or switch games or forget the game that you're playing, which is take some profit right here, right now. Today, if I have it, and if the stock goes against me, I got to get out and cut my loss. That's the game that you're playing. But is when you start to switch and say, let me see how high it can go. Well, that's something that people invest can say, because they can say, let's see how long Tesla's going to be a good company. Amazon's going to be a good company. They could have a good 10, 20-year run. They got time to find out, get through earnings reports, go through changes of leaderships, go through changes in the economy and people's buying and selling habits. They have the time. You do not have that time component when you're day trading. And let's look at swing trading. All right. Some of the mistakes that people make with swing trading, this is a big one. Maybe you've made this mistake before, but one of the biggest mistakes with swing trading is pattern recognition. You are trying to take a shot at the low risk time. All right. You are trying to buy during a pullback, during a sell off, because you're like, this sold off to this price. And this is a price where it's like, this is $1 billion company and they service all these people. This is a price where I feel comfortable owning it at. And so the mistake that people make when swing trading is that they're not waiting for the proper pattern, the proper setup, and the low risk time to take their entry. And so what happens is, if you have support and resistance and the stock is sitting somewhere in the middle, people come in and try to swing trade that pattern and be like, well, it can go up to this level to resistance. It's like, yeah, but it can also fall just as much down to support. And when you think about those two different levels, it's like, at the price you buy, if it goes up, you can make 50%, but if it falls, you could lose 50% of your account or 50% of the money you put in the trade. That is not a good trade. You want to get in where it's like, if the stock falls, I'll lose 2%, 5%, no more than 10%. But if I'm right and it goes up, I can make 50 to 100%. And that's one of the biggest mistakes that swing traders make, is that they don't take the calculated risk into the equation and say, okay, from this level, how much could I lose mixed with how much can I make? We typically like to say you want to go for a 1-to-3 risk reward ratio. If you're wrong, you want to lose $1. And if you're right, you want to be in a position where you make $3. And the skill to do that is being able to read a stock chart and determine the right risk reward ratios and the right support and resistance levels. Now, if you're swing trading, again, if the stock's up and down throughout the day, you don't want to take on the day trader's mentality and close out your swing trade. On the other side, when your stock moves up, we're just talking about being bullish. When your stock moves up to where you thought on a swing trade, one of the biggest mistakes that people make is similar to the day trader, but they start thinking, how high can this go? How much money can I make? This is the one that's going to put my kids through college, buy me the house, the car, whatever the case may be. And the problem with that is, once again, investing, they get the luxury of waiting 5, 10, 20 years to see if it's going to put their kids through college. When you're swing trading, you're just trading that pattern. So once it moves up to resistance or the price that you thought it was, you have to, I don't care how much money you've made, that is all you're going to make. And you need to have that mindset. Like, I don't care how high it can go. I said that I thought the risk was 1-to-3, that if I bought here, I can make $3 versus lose $1. The moment you make that $3, sometimes 2.5. All right. $2.75 per dollar risk. Sometimes you got to say that's close enough. That's close enough. It moved close enough to the number that I thought. Let me take my money and run. You don't have the time to wait and be like, man, is this the one that's going to put my kids through college? Because a swing trade is just that. Just like it swung up for you, guess what? It can swing down and swing the other way. And now you're like wishing that you would have took your money, took your profit. And then last but not least, when you go back to investing, some of the problems that investors make, and I've made this mistake as well. I've said, I'm going to invest in Amazon, Google, Tesla, whatever these stocks are sometimes. And I will buy I remember I bought I'll buy like 500 shares, 1,000 shares of Amazon, Google after they split or something like that, or before the split, what would equate to that. And I'll be like, I'm just going to hold this. I'm going to wait for it to, do a certain number. Then I'll sell options against it. There are some days where I'm like, I bought this as an investment. And there are some days where I'll be like, I'm going to jump out and jump back in real quick. And I immediately recognize the problem that I have. I'm like, you bought this as an investment and now you're treating it like a day trade or a swing trade. And so that's one of the biggest mistakes that happen from a mindset and a cross-contamination standpoint with your actions and your thoughts when you're investing. When you're investing, your thought is, I'm going to be in this long term, 1 to 5 years, but your actions switch over to being a day trader or a swing trader. And the moment it's down on bad news for one day, if you're you switch over to day trading, you're like, I need to get out. What's wrong with it? Or if you're swing trading, the moment it swings the opposite way and it's like waiting to swing and go back higher, we typically get impatient and say like, I got this money invested. It's not doing anything. It's taking so long. It's taking forever. And when you really think about it, forever to most people, it's like 2 months. It's like, it didn't move in 2 months. I need to go find some new stocks. And let me know if this has happened to you. The moment that you say, I'm going to go find a new stock, that's like the moment that the stock takes off and goes to the moon. And then you're like, I knew it was going to do that. I should have been more patient. Well, it's not that you should have been more patient. Is that you needed to make sure you don't cross-contaminate your thinking with your actions. Meaning if you were investing, maybe put that in an IRA account, maybe open a second account that you don't even look at and that you don't go in and out every single day and worry about the daily fluctuations of that account. Because once you switch from an action that was investing and your mindset should have been long-term, and now your mindset switches to short-term and worrying about the day-to-day fluctuations or a short-term swing up and down because the Fed spoke, your actions are cross-contaminated with the actions of an investor. They're cross-contaminated with the actions of a day trader or a swinger. And now you start liquidating things that you really should have held on to. And I'm guilty of this. I've sold some stuff, just caught up in the news, caught up in Jim Cramer, caught up in CNBC, just whatever was going on. Nothing against the network or news or Jim Cramer. I'm saying just watching too much either negativity or positivity sometimes. I've switched my strategy. Like this was supposed to be a swing trade. Now it's an investment. And then it turned against me. And I didn't even have enough time to recover because it was an option trade. And I was swing trading options. When I'm investing, I'm usually doing long-term stocks. And so you don't want to be in the position where you're cross-contaminating investing with swing trading and day trading and then getting caught up in the news and caught up in what's happening and making short-term decisions based on a temporary sell-off, a temporary pullback. You start making those short-term decisions when you really just need to calm down and ask myself, what's my goal? Am I day trading here? No. Am I swing trading here? No. Did I buy a good company? Yes. Did I research the fundamentals? Yes. Where do I think they'll be 5 years from now? Higher than this? Yes. Leave it alone. Sit on your hands. Don't do anything. If you think about day trading, you need to ask the same questions. Is this an investment? No. Did I research the company fundamentals? No. I just bought this because the momentum is down. Okay. Is the momentum still, or the momentum is up? Is the momentum still up? Yes. Stay in. If the momentum's still up, no, it's changing. Get out. There's nothing more to think about. I think we make investing and trading way harder than it needs to be. It's like, is it going up? Yes. Stay in it. The moment it starts slowing down or turning the other way, close it out, get out. Or the moment it hits the number that you thought it could hit, even if the momentum is still going, shut it down, take the money and run. You're trying to make money daily. Check that box. Did I make money today? Yes. There was never a box that says, this is only successful if I make this much today, because you don't control how much you make. You just control, did I kind of read the pattern right? And you don't even control that. You can still read the pattern right and it does the total opposite, but that's your best foot forward of what you're trying to do when you're day trading. And when you're swing trading, you got to ask yourself, Okay, it's going against me today. It's like, but did I buy this for a day trade? No. Okay, keep calm. Is the pattern still in the general area where it could form and swing and do what you thought it was going to do? Yes. Do you have enough time, like 3 months or 2 weeks, however long you thought it was going to play out? Do you have enough time to see if this will play out? Yes. Keep calm. Let it play out. But if the answer to those questions are the momentum's going against me, is this a day trade? No. Okay. Stay calm. Is the pattern still there? No. Okay. The pattern's not there anymore. It's not a good swing trade anymore, or it hit your I'm wrong level. Close the trade and get out. So if you have those correct questions to ask yourself, you should immediately know what to do, how to think, and how to act. And then last but not least, again, with investing, you say, stock's going against me today. Okay. Was this a day trade? Were you planning on getting in and out in the same day? No. Then chill out. It's okay. Yeah, but it hasn't been going my way for the last 3 days. Okay. Was this a swing trade? You understand it for 1 week to maybe three months? No, it wasn't a swing trade. Then relax, breathe, don't do anything, right? And then you say, has the fundamental story changed? People aren't buying these people's cars. People aren't shopping online. Maybe you're in Facebook and no one's using it as much anymore, and TikTok's coming to, did something fundamentally change to where you don't believe this company will be the best and they're not innovating for the next 3 to 5 years? The answer is yes, something's changed. Close the investment. It's a bad investment. But if you're like, no, nothing's changed, everything's good, they still make good products, still deliver to people, tons of people use it, the whole world's just going through inflation, a little bit of a pullback, then relax. No need to look at it even every day or next month. Just wait till next year, set some alerts for any type of big news that comes out, but don't switch and become a day trader or a swing trader when it's a long-term investment, because in each category, you're looking at 3 different things. And in each category, you also have 3 different mindsets. And in each category, you should be taking 3 different types of actions. And when you start cross-contaminating the goal or the game you're playing with the wrong mindset from a different game and mix that with the actions from the wrong game, you end up taking losses you shouldn't take because you took trades that you shouldn't take. And you end up getting frustrated with yourself as a trader, investor, day trader, whatever you want to label yourself. You end up getting frustrated with yourself and start questioning, is this even really for you? And it is for you. I'm here to tell you, it is for you. But you got to remember what game you're playing. Can you imagine if in football, the kicker all of a sudden start getting pissed because he wasn't throwing touchdown runs and he wasn't handing it off to the running back? It's like, that's not the game plan. You're a kicker, my guy. Just get ready to come punt and do field goals. That's it. That's your job. And the kicker knows some are going to go through the goalpost, some are not. All right. So that's the game. He doesn't get upset when he loses a little bit of money like we do in the stock market. It's like, that's the game. You can lose money. But does the kicker run out on the field and kick another day? Yes. Does the kicker ever say, I'm going to start tackling people and playing defense? It's like, okay, you don't even got a body to tackle somebody. Like, you go get hurt out there trying to play the game of the linebacker. Okay. That's the wrong position, my man. Right. So when he starts cross-contaminating his thinking, his actions, and his game plan with the wrong position, that's disaster for the team. That's the same thing with your investment account, your day trading account, or your swing trading account. So I want to make sure you stay in your lane for the game that you're playing, have the right mindset, and execute the correct actions. And I promise you, you're going to be grateful you stuck with this industry a year from now. I'll see you in the next episode.